Welcome back to Investing Talk Podcast. Today we're taking an in-depth look at CoreWeave, a company making, well, serious waves as an AI hyperscaler. We're getting ready for the upcoming Q2 2025 earnings report.
That's right. For anyone tracking the white-hot AI sector, CoreWeave is a name that just keeps popping up. Think of them as the, specialized high-octane infrastructure providers, really focused on those demanding AI workloads.
Right, not just generic cloud stuff.
Exactly. They're optimizing these huge GPU clusters specifically for training and running complex AI models. It's a very specialized and very capital-intensive business.
Okay, before we really dig into the CoreWeave situation, just a quick note. If you're finding value in these discussions, please think about subscribing, liking, maybe leaving a comment.
Yeah, your engagement really helps us keep bringing this kind of analysis to you.
Absolutely. And if you're feeling extra supportive, you can always buy us a coffee. The link's usually below. Oh, and if there's a specific company you'd like us to analyze like this, just drop in the comments.
Okay, so let's get into these CoreWeave numbers then.
All right, let's start with the basics. When exactly can we expect this Q2 report, and what's the market betting on? What are analysts saying?
Okay, mark your calendars. The report's going to drop after market close on August 12th, 2025.
August 12th, got it.
And then there's the conference call right after, 5:00 p.m. Eastern, which is 2:00 p.m. Pacific.
Okay.
Now, for expectations, the consensus among, I think it's 16 analysts, S&P estimates put it, they're expecting CoreWeave to report revenue of $1.08 billion.
Wow, $1.08 billion. That's a pretty big number for Q2 revenue, especially in this space.
It is. It really speaks to the scale they're operating at already. It shows just how critical these players are becoming in the whole AI ecosystem.
Yeah, that pace of growth is something else.
It really is. Highlights the, sheer amount of investment just pouring into AI infrastructure right now.
And what about the bottom line? Earnings per share, EPS. Are they making money yet, or is it still all about growth?
It's still about growth, looks like. The consensus for EPS is actually a loss of 49 cents per share.
Okay, a loss of $1.49.
Yeah, so despite that really impressive revenue figure, it shows they're still deep in that investment phase, pouring capital into, building out capacity, expansion.
Right, which isn't uncommon for these kinds of high-growth tech companies, is it?
Yeah.
Especially in something so capital-intensive.
Not at all. They're basically building the engine room for AI, and, well, that costs a lot of money up front. Profitability comes later, hopefully.
Hopefully. Now, sometimes there's that whisper number floating around.
Yeah.
That kind of informal street estimate that can sometimes matter more than the official one. Anything like that for CoreWeave?
That's interesting you ask. Actually, no. There isn't really a widely cited whisper number for CoreWeave this time around.
Huh.
Yeah, it hasn't shown up on their IR site or the major data aggregators. So the market doesn't seem to have coalesced around some unofficial target.
So everyone's just looking at that official consensus then?
Pretty much. It means there's maybe less room for those sort of surprise reactions based on beating or missing an unofficial bar.
Okay. And what about guidance from CoreWeave themselves? Did management actually give any hard numbers, like revenue or EPS targets for Q2 when they announced the earnings date?
Another interesting point, no, they didn't.
Really?
Yeah, they set the date for the results, but the announcement didn't include any formal, numeric guidance for Q2 revenue or EPS.
Okay, that feels significant. It puts all the pressure on the actual reported numbers, doesn't it? Investors don't have that management benchmark.
Exactly. It definitely raises the stakes a bit. The market's kind of left to interpret the results without that prior roadmap from the company itself.
Right. Okay, so speaking of results, let's look back a bit. What does their history tell us? How did they do last quarter, for instance?
Sure. So looking back at Q1 2025, that report came out May 14th. They reported revenue of $981.6 million.
Okay, just shy of $1 billion back then.
Right. And the EPS was a loss of about 78 cents, specifically negative 0.778. But here's the thing, again, while we have those actual numbers, the public sources we looked at don't really list a formal consensus comparison for that Q1.
Ah, so we know what they did, but not necessarily whether it was considered a beat or a miss at the time.
Precisely. It's a bit of a historical blind spot in the data we have access to. We know the growth is rapid, but judging past surprises is tricky.
Gotcha. Okay, so fast growth, ongoing losses, but unclear history on beating expectations. What about how the stock reacts after earnings? Is there a typical pattern we can see?
Yeah, that's another area where the data is a bit thin, unfortunately. The sources we review don't really provide a comprehensive history of CoreWeave's post-earnings price moves. There are frameworks like the implied straddle from options pricing, which tries to estimate the expected move.
Right, I've heard of that.
But the specific figures for this upcoming event, or even detailed historical moves for CoreWeave, they just aren't shown in the snippets we looked at.
So no clear sense of whether the stock usually jumps 5%, 10%, or drops after they report.
Not from this data, no. We lack that historical precedent and also the market's current expectation for the size of the move this time.
Okay, this is becoming a theme, isn't it? A lot of the usual data points, guidance, whisper numbers, historical reactions, implied moves seem to be missing or unavailable for CoreWeave.
It does seem that way, and it means, the market might be flying a bit more blind into this report than usual.
How does that usually play out? What does that mean for investors approaching this?
Well, it puts even more emphasis purely on the numbers they actually deliver, that $1.08 billion revenue target, the negative 49-cent EPS. With fewer external benchmarks, the reaction to the core figures could potentially be more pronounced, more volatile up or down.
Because there's less context baked in already.
Exactly. It really highlights the unknowns in what's obviously a very dynamic but maybe somewhat opaque sector right now.
That makes perfect sense. Okay, so let's pivot. Forget what we don't have. Let's talk scenarios. What would a bullish outcome look like here? What gets the market excited?
Right, the bullish case. Well, obviously, step one is beating that $1.08 billion revenue consensus and reporting a narrower loss than the negative 49 cents EPS expectation, maybe significantly narrower.
Okay, beat on top and bottom line.
Yes, but crucially, it needs to come with really positive commentary. Things like strong confirmation of their capacity additions, high utilization rates, meaning are those expensive GPUs actually busy?
Right, how full are the servers?
Exactly. And strong visibility into future demand for AI workloads. Basically, you need that classic beat and raise narrative. Better numbers now and clear confidence about continued acceleration.
Anything else on the bullish side?
Yeah, any sign of improving margins, gross margins, operating leverage. Given the Q1 losses, showing that the growth is becoming more efficient, more sustainable financially, that would be a huge positive signal.
Okay, makes sense. Yeah, the flip side, what's the bearish case? What could spook the market and send the shares lower?
The bearish outcome. Well, first, missing on revenue, coming in below that $1.08 billion mark. Or an EPS loss that's materially worse than the expected negative 49 cents.
A miss. Okay.
And that would likely be compounded if the commentary points to problems, like rising cost pressures, maybe energy costs for the data centers, networking expenses getting out of hand, or even high depreciation on all that new hardware. And critically, if they signal softer than expected utilization, if those GPU clusters aren't as full as hoped, that's a major red flag.
Because it questions the demand or their ability to fill capacity.
Precisely. And tied to that, if their outlook sounds cautious, if they sound uncertain about customer ramps or the timing of new capacity coming online, that lack of visibility could really amplify any downside reaction.
Got it. So beyond just the headline numbers, that forward guidance and the commentary on utilization and demand visibility seem absolutely key.
Totally. I mean, if I had to pick one thing beyond revenue and EPS, it's that qualitative piece. Bookings, backlog, utilization rates that tells you about the health of the demand. And given the losses, those margin trends are right up there too. Is the scaling path sustainable?
Right. So pulling all this together, based on everything we've discussed, the numbers, the context, the lack of certain data,
right.
What's your overall leaning heading into this report? Bullish, bearish, neutral?
Based purely on the sources we have in front of us, I'd have to say my leaning is neutral.
Neutral.
Okay. There's just not enough, definitive signals in this publicly available data to build strong conviction either way. The potential is huge, but so are the execution risks and the current lack of profitability.
And if you had to put a number on that, confidence scale, 1 to 10, where 10 is rock solid.
Probably a 4 out of 10.
A 4, so fairly low conviction.
Yeah. And the reason is exactly what we've been talking about, that limited consensus history we can see, the lack of formal guidance, the missing options data, like implied move. All these things just constrain your ability to make a high confidence call ahead of such a pivotal report for a company like this.
Understood. So with that neutral stance and, frankly, lower confidence level, what does that mean for strategy? What should listeners be thinking about if they're considering trading around this event?
Well, for folks who are more risk-averse, the uncertainty itself might be the signal. It might just be prudent to avoid holding common stock right through the earnings print.
Sit this one out, maybe?
Potentially, yeah. especially given the unknowns around margins, utilization, and the lack of those usual market expectation benchmarks. Now, for more risk-tolerant traders, particularly those comfortable with options,
Hmm.
you could look at defined risk strategies, maybe something like a debit spread, if you do have a directional view on whether they'll beat or miss that $1.08 billion revenue and negative 49-cent EPS.
Okay, a directional bet with limited risk.
Right. Or alternatively, maybe a strategy like a limited risk strangle, which profits if the stock makes a big move up or down, but that only makes sense if you do your own homework on implied volatility.
Ah, checking if the market's underpricing the potential move.
Exactly. And I have to stress again, the specific implied volatility levels or potential straddle costs were not in our source data. Anyone considering options needs to verify those independently before putting on any trade. Absolute crucial.
Crucial advice. Do your own homework, especially when the public data is patchy.
Wow, okay. What an exploration of CoreWeave. It really paints a picture of just how much information, but also how much uncertainty can swirl around these key players in a sector evolving as fast as AI infrastructure.
Absolutely. It's fascinating, isn't it? And I think the big takeaway for me is just how vital that forward guidance and the qualitative color on demand and utilization will be. Forget just the numbers. That's where the real story about their future trajectory lies.
Yeah, is the incredible growth actually translating into a sustainable, profitable business model down the line? That's the core question.
And that's really what we try to uncover here, give you the full picture, even when, parts of that picture are still a bit fuzzy or have some blank spots. Hopefully this analysis helps you make more informed decisions, or at least gives you a deeper feel for the market dynamics.
Definitely. Remember, investing is always about continuous learning, right? And understanding the why behind the numbers is often just as important, if not more so, than the numbers themselves.
Well said. It often feels like the story behind the numbers is where the real edge is. So maybe the question for you to ponder isn't just if CoreWeave hits $1.08 billion, but what does hitting or missing that number truly signal about their ability to keep scaling efficiently in this AI arms race? That efficiency piece feels key. Thanks for joining us for this session. We look forward to bringing you another breakdown soon. Until then, stay informed and make wise decisions.